The concept of the modern credit card evolved over time, but the first widely recognized general-purpose credit card was created by Frank McNamara in 1950. He, along with Ralph Schneider and Matty Simmons, founded Diners Club, the first card that allowed customers to pay at multiple merchants instead of being tied to a single business. Frank McNamara's motivation and idea. The story goes that in 1949, Frank McNamara was dining at a New York restaurant when he realized he had forgotten his wallet. This inspired him to create a card that people could use to pay for meals without cash, with the bill being settled later. In 1950, the Diners Club card was launched. Initially, it was used at 27 restaurants in New York. The first cards were cardboard, not plastic. Members paid an annual fee and had to settle their full balance each month. Evolution into modern credit cards. 1958, Bank of America launched Bank AmeriCard, the first revolving credit card, allowing partial payments with interest. 1966, Interbank Card Association, now MasterCard, was formed. 1970s, Visa emerged as a global brand, followed by widespread magnetic stripe technology. 1980s present, credit cards evolved with EMV chips, online transactions, and digital wallets. Concepts behind the credit card. Convenience, a cashless way to pay at multiple locations. Revolving credit, unlike earlier charge cards, later versions allowed users to pay in installments with interest. Merchant network, a system where multiple businesses accept the same card, increasing its value. Security, over time, added features like fraud protection and encryption improved trust in credit transactions. The modern credit card industry, worth trillions, is built on these early concepts. How and when credit cards became global. Credit cards became global through a series of expansions, innovations, and partnerships between financial institutions. The transition from local charge cards to a worldwide payment system happened gradually over several decades. Key milestones in the global expansion of credit cards. 1. The birth of the modern credit card, 1950s to 1960s. 1950, Diners Club introduced the first general-purpose charge card in the U.S., used mainly in restaurants. 1958, Bank of America launched Bank AmeriCard, the first revolving credit card, which later became Visa. 1966, the Interbank Card Association, now MasterCard, was founded to compete with Bank AmeriCard. Expansion beyond the U.S. 1966, Bank AmeriCard started licensing its system to banks outside the U.S. 1968, MasterCard followed suit, forming partnerships with European banks. 2. International expansion and branding, 1970s to 1980s. 1974, Bank AmeriCard expanded internationally, creating the Abanco organization to manage global transactions. 1976, Bank AmeriCard was rebranded as Visa, making it a globally recognized name. 1979, the Interbank Card Association changed its name to MasterCard for international appeal. 1980s, both Visa and MasterCard expanded aggressively into Europe, Asia, and Latin America. Key technologies that enabled global growth. Introduction of the magnetic stripe, 1970s, made transactions faster and standardized processing. ATM networks expanded, allowing cash withdrawals worldwide. Banks in different countries partnered with Visa and MasterCard to issue co-branded cards. 3. Digital revolution and global ubiquity, 1990s to 2000s. 1990s, the rise of the internet and e-commerce pushed Visa and MasterCard to introduce online payment systems. 2000s, EMV chip technology, Europay, MasterCard, and Visa, became the standard for secure transactions. 2008, Visa went further solidifying its international reach. 4. Present day, a fully global payment system, 2010s present. Visa and MasterCard now operate in over 200 countries and process trillions of dollars in transactions annually. Contactless payments, mobile wallets, and digital currencies have further expanded their global footprint. China UnionPay, American Express, and other networks have grown but remain smaller than Visa and MasterCard globally. When did ATMs start operating? The first automated teller machine, ATM, was introduced in 1967 by Barclays Bank in London, UK. This was the first machine that allowed customers to withdraw cash without needing a bank teller. Key milestones in ATM history. 1. The first ATM, 1967. Invented by John Shepherd Barron, a Scottish engineer. Installed at Barclays Bank in Enfield, London, on June 27, 1967. Used paper vouchers with a radioactive ink, not plastic cards, and a PIN for authentication. 2. The evolution of ATM technology, 1969-1980s. 1969, the first ATM in the US was installed by Chemical Bank in New York, using plastic cards instead of vouchers. 1970s, banks worldwide adopted ATMs, and the first networked ATM systems were developed. 1977, Citibank invested over $100 million in ATMs, leading to mass adoption in the US. 1980s, the introduction of interbank networks like Cirrus, MasterCard, and Plus, Visa, allowed ATMs to function across multiple banks. 3. Global ATM expansion, 1990s, 2000s. 1990s, ATMs became connected to the internet, allowing real-time transactions. 2000s, deposit-taking ATMs, mobile integration, and cash recycling ATMs were introduced. 4. Modern ATMs, 2010s present. Now found in over 200 countries with more than 3 million ATMs worldwide. Support contactless withdrawals, biometric authentication, fingerprint/face scan, and cryptocurrency transactions in some locations.